reason why multi-assets are also doing well also arose from the fact that, typically or traditionally one would think is that gold is a safe haven asset. There are geopolitical risks around the world, and maybe that's why, and of course, a lot of countries buying gold as well, piling up on that, in fact, which is why gold would be doing what it's doing right now. But then what explains the risk-on mode in equities?
Well, gold's a funny asset. It's very difficult for an asset manager like me because the way I typically think is anything that has a discounted cash flow I can value, and gold, inherently doesn't. As you alluded to, I think a lot of the rise in the gold price is Russia and China and the other central banks buying so much gold. I think it's been a very overcrowded trade. What it is not indicating is a concern about inflation, because that's not reflected in other markets. It's not really even showing geopolitical destabilization. So it's an odd situation. I think we're living in a world where the money supply is increased, and so it kind of makes sense that gold adjusts for that in some way. But the real thing I would say is gold doesn't seem to be the diversifier that it has traditionally been.
So what is the diversifier? Is it a multi-country asset allocation?
Well, everything is more correlated, so very hard to diversify. So the quick answer to your question is yes. Everybody seems to be overweight in the United States, and within the United States, overweight the Mag 7. So I am certainly jumping up and down, trying to push people to invest broader than the United States, and certainly broader than the Magnificent Seven. And that you used to do that. One way to do that, you thought, was to invest in indices, but now the indices are so concentrated that you actually would get much more diversity from an active manager or somebody that can,
as opposed to passive,
as opposed to these passive strategies. So then, yes, you need to diversify by country. You need to diversify by asset class. I think that fixed income, as interest rates come down, probably need to have fixed income, but also increase your duration. We are trying to advise clients to be in some private assets. Here in India, it might make sense to be in private fixed income or private equity or private real estate. Real estate is the one thing that has not gone up so much globally, and maybe an asset, especially if interest rates continue to drop, could do well, but it won't do well if the economy isn't doing as much.